Wrong one.
The real deal, per se, when it comes to breakouts. Quite possibly the most obvious and the most used and the most loved strategy for short-term traders and long-term traders alike. You know it's that breakout. You're probably looking at them every day, just like I am here at Trader TV Live. You guys know in the community, we see a good breakout a day, at least one that we think is going to be a good breakout. But I want to talk about something that you want to look to avoid. How do you not get rinsed on a breakout? And when can you take advantage of a false break? What are you looking for to not get rinsed? What are you looking for to take advantage of when everybody else is getting stopped out on a false breakout? And the best part about it is you saw today with Zim exactly what it looks like for a false break. And the best examples are the ones that you can relate to personally. So I'll tell you right now, I took an L on this loss, managed to limit it, but I still took an L on a breakout in Zim. And walking through this is going to be exactly how instead you could be maybe looking for a short here. So you set up what is a breakout, when is it good, when is it bad, all that good stuff. Usually you identify it with a significant level. Maybe it's an even $15. In this particular case, you can see on the daily, it's got a big short float, this name. It's been stair-stepping up. There's one peak at 15.25. It comes into today looking for a second shot at that peak. Obviously, you know in hindsight that it's going to end up failing that break. So there's your top. There's your double top. Who would not be looking at a breakout for this level? Now, the support from this peak to trough was 15.25 to 12.60. So if you're thinking in those terms, oh my goodness, this squeeze stock could go a couple of dollars higher off of that level, just based on the range it's been doing. Even if you think conservatively, you're thinking it could go $1.50. So risking from 15.25 back into 15 seems like an absolute no-brainer. I took it, and it completely reversed and didn't work. I even took a consolidation long that was no good. Tight stop, but a loss nonetheless. You're going to ask yourself, first, why would you not be looking to take this long? What about this? Good short float, catalyst, clear double top. Why would you not have wanted to take a long at 15.25? Well, a couple of reasons. One, in my morning note, I said not to, and then I didn't follow it myself. But why? Why wasn't I that interested? Well, it's kind of obvious. And it comes with a rule of mine that I've had for a long time. Now, I'm going to pull up a daily chart, which the other daily chart I purposefully did not zoom out. See this peak here on the daily when you go all the way back into August of last year? Oh, wait a minute. This high is above that 15.25. This is a 15.5 on Zim. Last I checked, 15.5 was over 15.25. And that means you are punching long into overhead resistance. Now, when I was a young trader, which was a few years ago, okay, it wasn't a few years ago. This was literally 20 years ago when I was told this by another trader. Do not punch long in a breakout into immediate overhead resistance. The big level, if it's clearing 15.25 and there's overhead resistance at 15.50 and you think it's a $1.50 move, then what's wrong with allowing it to break 15.50 to be sure? And then suddenly this previous double top can become your out. If you're thinking that way, which I should have been if I had zoomed out a little bit more, in the heat of the moment, it happens. You make that trade, you live with it, you take the loss. But if I'm not doing that and I zoom out like I should be, then I'm realizing there's an opportunity here. And that opportunity is everyone else looking at 15.25 or maybe long at 15 even is going to be trapped in that long if it doesn't break 15.5. And that gives you a shot for the reversal short. And if that happens, like it did today, it is clean, and then suddenly that move to the upside is the move into the downside. So you got to think about how you're executing a trade like this. It is not easy. Sharif went over some of this in our midday, talking about how you look at the level 2 for the reversal trade. But it all starts with the notion of there's overhead resistance at 15.50. Sure, it could work. 25 could blow through 50, and you don't even care about anything. But if you're patient enough to wait for the 15.50 level on Zim, then when it gets into this 25, instead of doing what I did, which is punch long, easy stop out, fair enough, could have been a heck of a lot worse. you're not doing anything except staring at the level 2, looking for rejection and sellers at the 1550. And very specifically, what am I looking for? I'm on the level 2, looking at the bid ask. As 1525 goes, you're going to see the spread open up. Now you're going to see stop orders firing. People that went long 25, they're hitting 26, 27, 28. Maybe they're hitting all the way up to 30. That offer is getting taken out because it's a massive double top. Are the bids starting to follow? This is a 2-cent spread. It regularly trades 1, 2, 3 cent spread. As it breaks above the 25 and you're starting to see the offers go, are the bids following? Are there buyers at 26, 27, 28? When the offer gets to 35, the top was 37. Are there actually bids at 36 and 35 when it gets to 37? When the answer ends up being no, because that was the case, that just means you're firing stops above, people hitting the offer, but nobody wants to bid above the breakout price. You're not getting that buy fill in. That is a telltale sign of a potential reversal. Now, if you're in the long already, you're in the long. But if you were patiently waiting and looking for that short opportunity, when you see that and it doesn't get to 50, when it comes back down underneath that 25, you're looking short. You should be fast enough because you were waiting for it to be able to grab it 20s to 25. You already know your out's at 1550. You're short, your out is at 1550. You can't lose on that trade. Now, sometimes breakouts work fantastic. I get it. The idea here would be, because of the overhead resistance, I shouldn't have been looking for 25. I should have been patient enough and willing to buy high and sell higher. Be willing to miss the trade to make the trade. Be willing to short that level instead. Now, obviously, there are other chances that you can take where a breakout is absolutely clean. Anybody watching NVIDIA the last little bit knows that NVIDIA 500 was an example. Uber, just let me go over to Uber for a quick second. Uber broke out on a 52-week high here, and it broke out pretty clean. Dip buy was only okay, but it broke out pretty clean to the upside. When it works, it just works right away. I always try to make sure that for every one breakout trade that doesn't work, or that does work, I can lose on 3 that don't. But even better if you can win on a false break because you sniffed it out. And that's exactly what Zim was about here today. It was right there for me. No questions asked. Zoom out that daily chart a little bit more, and it was obvious. There was the overhead resistance. No question about it. If you zoom out that chart, fair enough, it needed to be breaking out this top, not that one. We always ask ourselves, how can we make more money? Well, no better way than avoiding a trap that's going to cost you money and turning it into a winning trade. That is one of the best things you can do in the market. Do not punch into overhead resistance. We all love breakouts, but not all breakouts are created the same. So I hope you guys learned from this one. I literally had this trade today and took the L on what could have been a nice little winner. That's why I'm happy to give it to you guys. That's the real deal. Let's get back to the desk.
Real deal, Holyfield.
Transition.
Yeah, it was. That was like one of the best boxers ever, by the way.